Hello everyone, welcome to BISP Solutions. I am Tanvi Arora, working here as a functional consultant. So in today's video, we are going to see the case scenario of notes receivable in Oracle ARCS. So what is notes receivable? It is a balance sheet item that records the value of promissory notes that a business is owed and should receive payment for. A written promissory note gives the holder or bearer the right to receive the amount outlined in the legal agreement. Promissory notes are a written promise to pay cash to another party on or before a specified future date. So basically, these are the promissory notes that are debtors provide us that they will pay us on a so and so date on a future date. So basically, if we are giving time to them for the payment, so there must be some interest factor involved in this. So we will see the journal entries now. These are the journal entries for the notes receivable. This is the due entry. So they are our debtors only. So we are crediting the accounts receivable. We are booking actually. This is the due entry, and notes receivable we are doing debit. Then the next entry is for the due entry for the interest part, interest receivable. This is our income, interest, revenue. And finally, when the amount is received, the interest part is received and the notes receivable income is received. So we will just credit them and the cash will be received finally. So these are the entries. So this is the homepage of our application. The first step is to create a format. So we are going to use the already created format. I will go to application and then to configuration. And I will select my format from here. So the format that we are going to use is current assets. As you can see that because accounts receivable are our current assets only, and the method that will be used is account analysis, because the preparer is going to provide for the explanations for the notes receivable amount, how much amount is due from them, and how much interest part is also due. And once it is received, he's going to provide for the explanations and just submit the reconciliation. So as you can see, this is the balance summary tab, the source system, and the balance explanations tab is there, adjustments tab, and this is the balance explanation tab. These are the transaction details that will be used by the preparer to provide for the explanations. And this is the adjustment tab. These are the headings that will be used by the preparer. So I'm just going to save and close this. Then the next step is to create a profile. So I'm going to go to profile and create a new one. Click on add. Now my profile name is this is the description that we have provided. The process is balance sheet, because it's a balance sheet item. Risk rating I can provide according to my organization. Account type, I will select from assets. It is accounts receivable, because these are our debtors. Then the normal balance is debit. Organizational unit is North America. Format, I will choose. So I'm going to use the current assets format, and the method is account analysis. See, the method is account analysis. Auto reconciliation method, I will choose balance is 0. I'm going to provide for the days and for explanation days. Then I will switch to workflow tab. Here I'm going to provide for my preparer. So Frank Taylor is my preparer for this particular reconciliation. Frequency monthly. I'm going to provide for 1 day for offset and duration 2 days. It is scheduled from close date. And then I'm going to select my reviewer. Duration days 2. Then I'm going to define my currency and rate. So rate types, I'm selecting accountant, and currency is my functional USD. So I'm going to just save and close this one. Now, once the profile is made, the next step is to import the balances into the periods. Okay. So I'm going to go to the periods, and here I will choose June 21 as my 2021 as my period, as it is open. So I'm going to click on Actions tab, and then I'm going to import pre-map data and then choose pre-map balances. So I'm going to choose my file from here. Balance type, I will select source system, because we are importing balances in only one system. We are not comparing the source system and the subsystem. We're just analyzing. Okay. And the period is June 2021. Currency bucket functional, and the file delimiter is comma. So I'm just going to import it. As you can see, the import process has started. So I'm going to see the progress in the data staging tables. So it is in progress. I'm going to refresh this. See, the balances have been imported without any errors. So I'm going to close this. And then the next step is to create a reconciliation. So I'm going to go to the profiles tab again. Select my profile. This is my profile. I'm going to select this, and then from Actions tab, I'm going to create reconciliations for the period of June. As you can see, the process has been completed. Now I'm going to go to the reconciliations card to check for the same. This is my reconciliation card. Going to search for my profile. So as you can see, 70,000 balance has been imported and the reconciliation has been created. Now it is open with preparer. So I'm going to log out as administrator and open as Frank Taylor and provide for the explanations. So I'm going to go to the reconciliations tab and check for my reconciliation. It is for the period of June. I'm going to open this reconciliation. So as you can see, this is the summary tab, and 70,000 unexplained difference is shown here. Okay. Now I'm going to provide for the balance explanation. So I'll go to the balance explanation tab, click on add. I'm going to provide for the description. And then this is the transaction date. I'm going to keep it as it is. And then I'm going to provide for the difference here. I'm going to save this. So I have provided for the explanation. Now I'm left with no unexplained differences. So I'm quickly going to submit this reconciliation. So this is the complete process. And this is how it is done. Thank you so much.